Ying Coyle from Compass Real Estate, and this is Matt Coyle. Hi Matt, how are you?
I'm doing great. How you doing, Ying?
I'm doing great. So Matt, we're giving another market update, right?
Not again. We did one last week.
But things happened.
They do. Okay, and the big things that happened over the weekend was we had a couple of bank failures. Two in particular, SVB, which is Silicon Valley Bank, and the other was
Signature Bank.
And we know that SVB was the second largest bank failure in U.S. history, right behind Washington Mutual in 2008. The last time we had a financial crisis.
That's right, yeah.
So why are we talking today, Ying?
How that going to affect the housing market, right?
Exactly, because what the big question is this going to influence the chairman of the Federal Reserve to continue raising rates or to take a step back and stop raising or potentially cut rates?
Yep.
And that's what we're going to find out next week, right?
Hopefully, right? Is that the definite answer? We have to hear something?
Well, we could hear earlier, but they're scheduled to meet 21st and 22nd, so, stay tuned because that could have real ramifications for the housing market.
That's awesome. Okay.
In addition to the bank failures, we had some economic releases on important ones, CPI, in the inflation report that came out for February, and it was 6%, which is still pretty hot. It's roughly 3 times the Federal Reserve's target of 2%.
Yeah.
So
still high for them.
So obviously that's going to be a big discussion item at that meeting.
Yes.
And then certainly unemployment came out that Friday before, and that was fairly benign at 3.6%, still historically low. But something we want to keep a watch out because unemployment would obviously affect buyer behavior as well as seller behavior.
Exactly.
So let's talk about the broader market outlook for real estate. So in the U.S., I would say right now everything is contingent on what the Fed does next in terms of raising or potentially lowering interest rates and just the general economy.
Inflation, interest rate, it's always the 2 big factors.
Right, you just always need to be careful, understand what the economy is doing and so forth, because that'll affect jobs and people's ability to buy houses or people's ability to continue paying off their mortgage.
Right,
so
right.
It matters.
So Matt, how about we run some scenarios here?
Okay, good.
So if Fed gonna cut the rate,
I think it's highly unlikely, but what do I know? I mean, inflation's at 6%.
What's the housing market gonna read?
Right. I don't know what they're going to do, but given inflation's still running pretty good, I find it highly unlikely they would. But if they do, I think you'll see homebuyers coming back to the market, to the real estate market,
right?
Which would be good for sellers.
The price gonna hold firm, right?
And I think that'll help firm some of the declines in prices we've seen, and we'll talk about in a few minutes.
Okay.
So if they raise their rates again, I would expect. It all depends on the size, of course. But if it's 25 basis points, maybe 50, I expect it to be a continuation of the trend we've seen so far, where buyers are continuing exiting the market because of affordability.
Right. Yeah.
And I think you would see prices continue downward pressure on home prices, despite the low inventory out there.
That's true. What if nothing changes? That could happen, right?
Well, I mean, I guess the old argument of uncertainty breeds opportunity, and that's we know from our experience that there's opportunities out there to buy and sell houses today,
right.
And you had to be in it to win it. So.
Well said. Yeah, we did say that in last episode.
So with that said, let's talk about Wellesley specifically. So in these slides that we prepared, I just want to go over price first, okay? And we're looking at both the average and median price. We look at both because the median takes out the extreme values, the high and low sold houses prices,
right.
And the average takes into consideration all of them. It's just another way to look at it. But this chart is in the green line, just specifically looking at the year-over-year change in prices.
This is like 5 years price change.
Right. It's from 2019 to 23. In 2023, prices were down 10% roughly. So not chump change, certainly important, but it's that's.
It's still a big change compared to Massachusetts.
But compared to other jurisdictions like the West Coast, these are pretty mild.
Yes.
In terms of the median, the same slide, we're just looking at the median year-over change. Again, median takes out the extreme values. The drop is only minus 0.5%. So we show both so you can have a kind of a gauge of where the prices
A
go.
range, right?
Right, give you a range of where prices are falling. So we know prices are under pressure and they're falling. So and somewhere between 0 and 10% is probably where we are. So considering where we came from and prices have been rising for the last couple of years, it's still relatively attractive market for sellers.
Yep.
In terms of this slide, we're looking at sales price versus list price. So anything above 100% is a premium to the
Is over
Yeah.
asking price.
Right.
Yeah, we saw that last year.
Right.
And this year we did not see that, right?
Right, we're seeing about a 3% discount. So brokers are getting like homeowners are getting 3% less than they're asking for. So on average. Next slide, we talk about days on market. It's important how quickly a house gets under contract. We're looking at about roughly 39 days or so, which is so roughly a month versus 2020, which was roughly 3 months.
Which really, that's our average. Normal market, it takes a few months to get a
Yeah,
house
I mean, we've been spoiled the last couple of years, and
Right.
it just shows you the low inventory and the demand for housing. So it's still, again, from a seller's point of view, pretty attractive.
Yep.
The last chart I want to talk about is closed sales. Closed sales have been down 42% year over year.
Because there's no inventory.
Again,
Still.
no inventory, and that's largely been keeping prices from falling further, despite what the Fed's been doing with interest rates. So the real story here is got to watch out for what the Fed does next week. Okay, decision could come earlier. If there's more bank failures, I would expect a lot of pressure on the Federal Reserve to keep rates stable, or to cut that.
Yeah, that's what we're hear a lot of people talking about.
Whether that's the right decision or not is not what we're here to talk about. We're here to talk about how it'll impact the real estate market. And certainly if they cut, I think that'll bring more activity to the market than if they continue to do what they have been, which is further strengthening rates.
Okay, thank you, Matt.
Great. I think that's it, right?
That's a wrap.
So no more market updates. We're done for the month.
When the Fed have the decision make next
Oh,
week,
okay. Yeah, there you
maybe
go.
we'll give another one. And till then,
Great. Thank you for signing up. Bye-bye.
bye bye.